find that investments, especially on equipment, are in contraction, not in growth, but in contraction. That hints two things. One is the semiconductor chip shortage, and therefore companies in China can't invest in equipment, not because they don't want to. The second thing is that they don't want to because the economic prospects are not as good as expected. I believe that it is both of them. So what are behind the unexpectedly weaker prospect of the economy? First thing is international politics. US said that it won't have a high-level conversation with China. Before this, 25 Chinese companies added to the entity list so that these companies can't do any business with US companies. And then Japan told the world that it has to align with US. So all these means that China's technology advancements will be very, very difficult. China from within is also calling out risk. The Chinese government is still heading towards reforms. So these reforms means that credit risk increase. And now we have more. For example, Delta variant could affect social distancing measures in some export markets. Although we have to revise upward the China GDP growth rate, but actually the third quarter and fourth quarter looks not as good as the second quarter, and therefore we'll have a slower growth in the second half of this year.